All right, let's go ahead and get started. We'll start off with the S&P 500, just kind of look at some levels, expectations, and just talk a little bit about what we expect coming into the next few months of 2022. So first and foremost, as epic as this uptrend has been, we still only have three waves. I've said it. I think I've said this every week for the last several weeks. And assuming that this is the start, that June 16th was the low, and that we are starting a brand new uptrend through 2023 to 2024, this would only be the third wave of the larger first wave. And what I mean by that is, in order for this to be justified as that first wave, we would need to see a fourth wave pullback, then another fifth wave to new highs. And if we get that, we can start being excited. And we typically don't try to time corrections. That's just not really what we're trying to do. The reason why we're a little bit more focused on this coming pullback is because we only have three waves off the low. There's still, because there's only three waves, this still could be a bear market rally. I don't want to say yay or nay on that, because when we were down here, everyone was quite certain that it was going to continue. And now that we're up here, everyone's quite certain that this will continue. And, we're seeing sentiment extremes that we last saw in mid-2021. So we're ripe for a pullback, and that pullback will really tell us everything. The pullback the structure of it, if we go down in five waves, that tells me that this was the B wave and we're starting a C wave down. I don't see that happening personally without some kind of new catalyst. I think all the information that caused this bear market has certainly been priced in. So it would have to be something new the market's not seeing. But let's say that we just retrace in three waves and then turn back up in three waves. Then we have our first wave of a brand new uptrend. So that'd be fantastic. And our game plan would be, once that first wave is done, we then have a large degree second wave to contend with, which will most certainly take us back to the 4,000 region, the minimum, I believe. Not minimum, but around that region, and that would be the time to start really loading up. And then on the breakout above the top of the first wave is when you really go. I mean, that's when we'd probably go leverage if we were going to do that, because we'd be starting that third wave. But we're talking about big waves, like from June until right now, which is August. We're only halfway through the first wave, if this is what's going on. Okay, so this is the grid that I believe we're working off of. And these are the levels that seem to be where the market is really finding a lot of resistance and support, and so we're currently struggling around that 43.4295, which is right at the 200-day. I wouldn't be shocked. There's probably so many stops around the 200-day right now. I wouldn't be shocked if they run it up into 43.75 next week, just to stop everyone out, make sure no one's short before it gets brought back down. You see moves like that all the time. Investing is rarely as easy as we touch the 200-day and then turn back down. It could be, but I wouldn't be shocked if we take another run at it, maybe above it a little bit, just kind of hover around and make sure as many stops get hit as possible. But in terms of the structure of what that leading diagonal would look like, it'd be the blue count right here. So we have 1, 2, 3. We have a fourth wave, probably back into the 4170 region. I've raised the critical level for this to about 4020. I wouldn't want to see it go below 4045, but 4020 is the absolute lowest. If we break below here, then the 1, 2, 3, 4, 5 wave move that would suggest the bullish outcome, the long-term bullish outcome, would be off the table. And instead, we'd likely be seeing like a, then a B, and then one more C wave push probably into, fall, winter of this year, before we get that C wave down to new lows. So like I said, just the structure of this bounce is not decisive right now. If you're just going based off of just evidence to build the case, it's not there yet. but we're close. And if we can get that fifth wave, I mean, that's when, that would make for a really good 2023. We get really excited about that. But this is what we're looking for right now.